Well, hello and welcome to this edition of Closing Trades from the ET Now Motilal Oswal studio. And it's not looking all that bad, fairly stable, much unlike what the past two trading sessions at least this week have been. While we did see that little bit of a dip, got close to that 22,850 print in the Nifty futures. A rebound from there is what we've seen if we can just bring up the intraday graph. Yes, in the last 7 days, we've fallen almost 1%, but it's been much more stable a graph today. So consolidation is how one would describe at least what the Nifty has been up to. Good day for a second consecutive day on the trot actually for the market breadth, even though we didn't quite start off with this kind of a figure. But right now at least it is the advances which are taking over. A count of 179 within the F&O universe is what you're seeing on the greens. Power, metals, oil and gas, cap goods, realty, they are the dominant sector. Can't say the same about new age, technology and telecom. They are the ones which are ebbing off, and not a whole lot by way of performance from the pharma index as well. But the losers within the large caps right now, there's Maruti. HDFC Bank is significantly lower right now, down a good 2% as we speak. Some of the technology plays like TechM, HCL Technologies, etc., also ebbing off. Kotak Bank is a loser, Bharti, ITC, these are all stocks which are seeing some dips, as is Bajaj Finance. The underperforming leg of the market, that's making a comeback. So M&M, for instance, which has been cracking last 2 days, that makes a jump up. There's Hindalco, which is going steady. Trent is higher by 2.25%. Tata Motors is up in the green. So is the case with the Bajaj Auto. ONGC is seeing some follow through, 1.6% higher there as well. And then Tata Steel being the other one, along with NTPC, which is also holding strong. That said, Maruti is down 2.5%. There's Nykaa, which is down 2% again. Laurus Labs is down, and as is the case with Cyient after those management changes, that stock as well is reeling under pressure. On the gaining side, NHPC, like I pointed out, NTPC, both those stocks holding up very well. There's APL Apollo, which is higher by 6%. IGL is higher. BSE for a second consecutive day, that's been seeing some fabulous moves. And then Bank of India also higher by nearly 5% as we speak right now. But what is it that you make of this very stock-specific kind of trading day? Well, the index lies quiet. We've got Kunal Bothra, Naresh Mirani joining in on the show for that, and we'll have our fundamental expert as well join in just seconds from now. Kunal, hi, afternoon. Sedate a day for the index, but what's going on within the composites? What are you making of the trend so far?
Yeah, it's more of a relief rally. It looks like more of a relief rally towards lot many stocks which were beaten down significantly over the last few days and weeks, where you've seen many of the mid caps and small caps I think falling by 20%, 30%, also in the last 8 to 9 or 8 to 10 trading sessions. So I think it's more of a relief rally into those kind of pockets. The concern for the market still remain that we are lurking around the 22,800 mark on the index. And the other point is that large cap names are actually starting to see some bit of pressure, and these are the solid large cap names which are actually holding up pretty well since the times when the markets were onto a bit of a rough kind of a patch. So it's the likes of HDFC Bank, Bajaj Finance, HDFC, and many of the other names which had actually done reasonably well. So I think it seems like more of a relief rally towards individual stocks. Maybe this could be also an indication of short covering move for these specific pockets. But what we need to see is that if the index sees a follow through over the next couple of days, if we manage to break past about 23,000 mark, say on the spot levels, close above that level for a couple of days, that's where we can expect that the markets would probably regain its momentum back.
All right, so that's the take about markets. We also have Mayuresh Joshi joining us on the show. Before I come to you, Mayuresh, let me take it to Naresh and get his view on one of the sectors that everyone was touting to be the leader going ahead, and that has to be the FMCG index. Mayuresh, I beg your pardon, Naresh, given the fact that FMCG index is seeing a decline for a 14th consecutive session, correct me if I'm wrong, and I believe this is a record losing streak coming in for the sector. Given the fact that on February 1st, when the announcement came in for the budget, this one actually saw a good spike of about 3%.
So it's been a very sharp cut in Nifty FMCG and the whole FMCG stocks. But now it is interesting because the stock prices have corrected sharply and they're back to the prices where they were in the mid of 2023. A lot of stocks like Dabur are back to the prices they were 6 years back. You have Godrej Consumer, which has taken a large knock and has started seeing a bounce back today. So Godrej Consumer is at the same price where it was back in 2021. So I think there could be selective opportunities across the board. And now from here on, buying on this dip would imply it could act as a defensive portfolio pick for you. So for now, Godrej Consumer looks interesting at current levels. Then similarly, Hindustan Unilever closer to 2100 could be a good entry price. Dabur at current level looks like a good pick going forward.
Right. Mayuresh, what is it that you're making of the market right now? It's been sedate today, at least for the index. But what about the constituents? Because if I look at some of the key large caps, the likes of a Maruti, HDFC Bank, Bharti, ITC, Kotak Bank, they're not participating in today's market. They're all down. Mayuresh, what's your view on the market?
That's for me, Aisha? Sorry.
Yes, that's for you. Okay, we seem to be getting a little bit of a disconnect with Mayuresh. We'll just get back to him. But Kunal, to you, the constituents of the Nifty Bank, ICICI Bank, HDFC Bank, Kotak, all of them down. What are you making of the moves here?
Yeah, difficult to comprehend that what's actually going on. This could be maybe a shuffling which could be going on. Traders were positioned on the positive side for these stocks for a point when the markets were into a rough patch. So maybe a buy on defensives, so-called large cap names could have been the strategy. And now there could be a possibility that the money is shifting back again into these high beta pockets or the ones which have been beaten down because maybe the valuations, technicals, etc. could have started to look attractive into this pocket. But I think this could just be a temporary shift which could be happening. What we need to see is that if in case over the next 2 or 3 days, you see these large cap stocks making a comeback, that would help the Nifty propel back again above the 23,000 mark. And that's going to ooze the confidence a lot more further for the markets.
Right, that's a take coming in some of the banking names. Mayuresh, I hope you can hear us now. And like Aisha was asking you, what exactly should one make of this market, given the fact that now we're seeing some sort of a semblance actually creep in? But given the fact that the way how the market has been trading a bit of a range bound over the last 2 to 3 trading session, how should one actually strategize for the future? What should the strategy be, given the fact the a large part of correction is already done for the SMIDs?
Oh, afternoon to you as well. I think we've just recently published a few data points which are sounding a little bit more optimistic as we speak. So we've actually done 3-4 analysis. One, I think in terms of the bond yield and the Nifty earnings yield, this has largely contracted, and this has come down to around 1.8, 1.9 in terms of the spread that between the earnings yield and the bond yield. And once it crosses 2, I think a large part of the move probably gets gestated. So very, very close to that. So either we are very, very close to forming a bottom, or the expectation of the market that the earnings downgrades should largely be over as we hit Q4 or Q1. So that's one parameter where over the last few years we've seen that has worked well in favor of the markets. The second element is in the entire Nifty 500 universe, there are only 15 stocks or 15 percentage stocks which are probably trading above the 200-day moving average. Now, if you've seen in the historical past, whether you go to 2008, whether you go to 2014, or even the COVID crash, when such a scenario happens, I think the next few weeks or the next few months or the next few days, depending on the time horizon, I think the market usually bottoms out. The third parameter that we're looking is the dollar index. Obviously, it had capped out at 105 in the previous few times. This time it has topped out at 110, 111. Generally, I think the dollar index is breaking down as we see it. It's broken down its 50 and 21 daily moving average. And if it's capping at 110, the peaks and troughs that it's create resembles the Nifty move correspondingly or inversely. So to that extent, I think if it's topping out, there is a good chance that Nifty is bottoming out and it might show some amount of strength and resilience going forward. And last but not the least, I think what we're seeing at Markets with India in terms of our own parameters, how we map distribution days as an example, and gauging how market bottoms can traditionally be formed. 22,725, the recent lows, the market has defended that over the last few days. It has got into a rally attempt as we speak. And as Kunal was just mentioning, we do get a follow-through day as we see it at Markets with India, 1.5% move on the index over the next few days. You might have a potential bottom in place. There will be volatility. There is no two ways about it. And therefore, our approach is that we are a little bit more cautious, focus on rural sectors because that's what's being thrown up in terms of our sectoral rotation graphs as we see at Markets with India.
Mayuresh, one can't time it to the T, obviously. So what is it that you would be gearing up to buy whenever you feel we're getting close to a bottom?
Afternoon, Aisha. Sorry, I couldn't hear you before. So two things, I think. One, in terms of the expectations of rural coming back very, very strongly. You've seen a good Rabi harvest come through. There is expectations of La Nina conditions brewing, and therefore I think the expectation of a good Kharif season expected to come through, followed by a better Rabi season next year around, will mean that the rural recovery will be well and truly on. I think multiple ways to play this, but at least at this juncture, agrochemicals as a space is something that we are probably looking at very, very closely. Stocks like Coromandel International are part and parcel of our model portfolio as a clear disclaimer. Our take is that volumes should significantly pick up. Farm gate prices have remained extremely strong and stable. Input costs, because a large part of their backward integrated operations are largely proving out to be beneficial as far as margin performance is concerned. And the factors in terms of the outstanding subsidies coming off, with a relatively better balance sheet compared to its peers, tend us to believe that the earnings momentum might continue. In terms of the technical parameters, EPS, RS ratings, institution holding, they seem to be on a very, very strong footing. So I think this space, Coromandel is something that we continue liking. The other element, obviously, is a few of these hospital stocks, which probably lie on our radar as well. Because here, again, our belief is that the consistency in numbers delivery might very well continue. You've probably seen stable numbers come through from a whole host of players within the spaces itself. And therefore, I think with the bed additions that a large part of this universe is probably doing, an asset-light model that they're probably following at this juncture, the average revenue per operating bed, the average length of stay, the key parameters should start showing signs of improvement as a lot of these new centers start approaching maturity in the next few quarters, leading to better ROEs and ROCs as we see it at markets. But again, I think the EPS RS rating look extremely fine. Max Healthcare, KIMS, something on our radar as well. Last but not the least, we are also being a bit constructive on financials as a space, because what we probably expected to see because of market volatility, the deposit accretion might remain steady and stable going forward. Banks have clearly have their focus in terms of CASA accretion, and specifically with depleting CASAs over the last few quarters, would mean that deposit growth as it comes through would reflect positively in terms of advanced deposit ratios. Cost to income ratios are looking very, very stable as we speak. And therefore, as per quality pressures coming off, lending to better return ratios, ROAs and ROEs, seem to be a plausible case. Again, it's a consensus that a lot of people on the street have, but this sector might actually do well in FY25. So larger names like a Kotak Bank probably just stands out at this juncture within the mid-cap names. Karuri Vaishya Bank is something we'll continue holding in our portfolio.
Some of the sectors in the stocks that Mayuresh finds pretty attractive at this point in time. But on that note, we'll slip into a break on this edition of Closing Trades. More on the markets on the other side. Don't go anywhere. Welcome back. You're watching Closing Trades on ET Now. Let's continue with our conversation with our experts. We have Naresh, Kunal as well as Mayuresh on the show. Mayuresh, let me come back to you. Just while we're slipping into the break, you did speak about the fact about financials and how you are liking especially large cap financials. But if you look at the way how the FII selling has happened through so far in 2025, most of it has been from the financial segment. Do you think that given the fact that you are seeing that sort of easing out of the valuations, that also could be one of the reasons why financials will do well?
So two aspects. One, I think in terms of the core portfolio itself, the expectations in terms of financials expected to do well is based on a couple of percents. One, obviously, I think the deposit growth should normalize, which was the biggest concern for the entire system. And as this normalizes, the expectations in terms of more stability happening in advances growth reflected through the credit deposit ratio should be relatively better as we head into the next financial year. Obviously, I think the interest rate cut cycle might get delayed and deferred because of the data points that we are getting out of the US, and because one has to maintain parity between the US treasury rate and the Indian rate as well. You're probably expected to see our rates also getting deferred. That might just have some element of impact as far as the overall cost of borrowing is concerned. But it is also beneficial to an angle, because if the rates start going down, I think the deposits rates might start going down as well significantly. And that might again hamper the entire ecosystem in terms of garnering more deposits. The third element obviously is that the riskier asset base and the risk-weighted assets to the overall assets itself are very much under control. I think what the regulator has done and RBI's moves in terms of unsecured loans, in terms of personal loans being curbed to a large extent, will mean that asset quality pressures, restructured assets, and slippages should be relatively lower. And therefore, I think the base case scenario is that earnings should probably start picking up in the first half and significantly in the second half. Valuations are not too expensive as well. And as we see the structures, including the rating and rankings that we have at Markets of India, as I mentioned, banks like Kotak Mahindra Bank on the larger private sector space, banks like a Bank of Baroda is shaping up very, very well. And Karur Vysya Bank within the private space in the mid-sized banks actually might post a reasonable set of numbers going forward as well.
Power, clearly that seems to be the leading sector today. So be it in NHPC, which is holding up 6%, there's NTPC higher for 2 consecutive days. There's a JSW Energy, Tata Power. These are all names which are looking strong. Power Grid as well, holding up about 1%. CESC, SJVN. The entire energy theme is what is actually taking over today. Naresh, anything that's looking good from within the power names?
So first is if you look at NTPC, which has started making a bottom at 300 and moving up. So that is one which would continue towards 350. Second could be Power Grid, which has again corrected a lot and is making a base around 255, 260. And finally, JSW Energy, which has seen the largest drop in the segment, that could also do well from current levels.
All right, so those are the picks coming in from the power space for Naresh. By Samit Varthak, he believes that to play the power theme, he's playing it via the power financiers. And why does he feel that they are the safer bets? Let's hear out his views.
I am betting it through power finance because then it's more, more diversified. Because whether it's renewable, whether it's nuclear, whether it's thermal, any kind of power infrastructure which is built, it can fund the distribution network, it can fund the power generators across the board. You will benefit. Whether if you just bet on a specific play, like whether it's a wind or solar, it completely depends on the regulations. This is much more safer play where the gross NPAs and the net NPAs will almost be zero. They are writing back a lot of provisions they had taken in the past. They're delivering 20% kind of a return on equity as well as 20% kind of a growth overall. And you're getting these companies at 1.2, 1.3 times kind of a multiple. Whereas at the peak in 2012, they were trading at 3.5 times. So reasonably valued. They may have corrected, but these are the opportunities. One has to differentiate between which are the long-term sustainable stories, because India cannot grow without power. So if you are betting on India, you need to find a risk reward plays within power, which will deliver you over the next 3 to 4 years.
Okay, that's the take coming in on power, and Samit Varthak believes that the best way to actually play the theme is via the financiers, PFC, REC namely. But let's get in some closing strategies as well before we move forward and enter into the last half an hour of trade this afternoon. Kunal, what's on your list?
So I'll go with a financial services name. It's a buy on Chola Finance. That's stock which I think is confirming a triangular as well as a flag pattern breakout just about that 200-day moving average. So expecting the stock to get into a swing breakout mode, a 5% upside is what I'm expecting within near term.
All right, so that's Chola Finance. Closing trades coming in for Kunal. What about you, Naresh?
So that would be a buy on NMDC. The stock has given a breakout about 67 finally, a triple bottom done here. So expecting it to go towards 75 in the short term.
All right, so that's the closing trades coming in from both of our experts on that note. Thank you so much, Mayuresh, for being a part of the show and sharing your views on the various sectors that one can look at in this market. But on that note, we slip into a break on this edition of our closing trades, and more on the markets on the other side. Don't go anywhere.
Back with closing trades right here on 18 now. Let's just take stock of where the market is currently at. We've stabilized at least for the Nifty. What's not looking good, of course, is some of the key heavyweights which are not really participating today and are under pressure. There's, of course, Maruti, which is down 2.5%, HDFC Bank, Bharti, ITC, couple of the technology plays. And then, of course, there's Kotak and ICICI Bank as well, which is under pressure. Let's welcome on board Sudeep Bandopadhyay then and find out what he's making of the market right now. Sudeep, just looking at the markets today, it seems like at least within the Nifty, there is a churn which is taking place. Where would you recommend now, if at all you spot any value in the market after the recent correction?
I do spot value in BFSI, Aisha. I think, BFSI never went up the way the other sectors went up. And, after correction, some of these stocks are really looking attractive. And if you want to remain, safe, play safe, not an aggressive strategy, then it's best to stick to the large cap banks. State Bank of India comes to my mind, and I think there are enough and more indicators which will clearly point out that the valuation is attractive. Asset quality has improved and is improving. All the subsidiaries, including SBI Cards, which had asset quality challenges, have come out of that and things have improved. Performance of subsidiaries is good. Credit growth is decent. Interest rates in the economy is coming down, which does favor efficient and large banks. So overall, I think SBI definitely needs to be looked at from an investor's point of view, from picking up and building a portfolio. I also like cement. I think till Q3 there were challenges on demand, and in spite of demand challenges, some of the companies, like let's say the leader Ultratech, did exceedingly well. And the cost efficiencies they brought in led them to beat the market expectations. And in a scenario where demand is picking up and is expected to continuously pick up in the near future, I think they will continue to perform and outperform the market. So again, Ultratech for a safe investor does look a good bet at current levels. One can look at defense electronics, and I do like Bharat Electronics, BEL, quite a bit. Post correction, it definitely looks attractive. Look, it's not a cheap stock, but if you are in for 1+ years, I think BEL again is a good buy. Remember, it does cater to all sections of the armed forces, Air Force, Army, and Navy. They are also into exports now, and the company has been well managed for quite some time. The balance sheet is strong, so BEL amongst the PSU defense electronics can be looked at.
Talking about BEL a short while ago, they did mention the fact that they've bagged an order from the Ministry of Defence. So that also could be one of the reasons why the stock is actually perked up in trade today, approximately 3% up move coming in for BEL. Sudeep, good afternoon. Cheryl on the other side. Just wanted to get your sense and your understanding of the entire auto space, given the fact that there was a time when everyone was talking about the EV disruption and what it could do to the entire space. Now, more and more, it looks like that disruption could actually fizzle off. The entire enthusiasm behind this EV sort of a thing is dying down now.
I don't think it is dying down, but yes, I think there was little more exuberance than probably what was warranted. It will take time. We were assuming, I think market was assuming that it's a magic wand and suddenly EV will become the leaders and anything to do with EV will start doing well. It's not so easy. It will be a gradual and long period of transition. And even after transition, IC engines will have their place. I can talk about a parallel of coal. At one point of time, people thought coal will be redundant. But look at what is happening today. Thermal power is growing. So is green energy, so is hydro. So I think it will be like that. EV cannot miraculously start doing well and take leadership position. It's a long grind. Having said that, I think the uncertainty around EV is also too much. So if somebody is interested in the automobile pack, my thought will be better to play through auto ancillaries. And I have been talking about this for very long. I think some of the auto ancillary companies in our market are playing in the global space, and they are very well integrated with global OEMs. So one needs to look at them.
The other bunch of stocks is the entire, tobacco pack. Look at what's happening with an ITC, for instance. Look at what a Godfrey Phillips, and how unfortunate, because just yesterday the stock spiked up about double digit. There are reports doing the rounds that perhaps GST on cigarettes and tobacco products may actually be raised all the way to 40%. Currently, remember, it's at 28%, and it's applicable on these products besides the cess and other levies also, which take the total indirect taxes to 53%. Why the move could be mulled? currently the indirect tax collection on these products, like I mentioned, is at 53%, which is below the 75% recommended by WHO. The idea, of course, is to ensure that the tax revenue on these products does not fall once levying of the compensation cess ends, which is now scheduled for March 31st of next year. But Sudeep, in this current decline, because we're talking about an addiction sector here, do you sense that volumes could get impacted for any of these players? Today, of course, is a knee-jerk reaction, but if the stocks fall even further, do you think they become good buys?
Well, Godfrey Phillips have performed remarkably well in the last 1.5 years. And and in the market also they have gained market share. So there is absolutely no doubt about Godfrey Phillips and its performance. ITC and VST, the other two companies, have been a steady, stable performers. One has to keep watching the space as far as the excise duty and the GST and cess and related challenges. One has to see the assumption that demand will start falling because the prices will go up hasn't held earlier. Also, demand has been pretty constant, to an extent inelastic. While they must have lost some consumers on the upper end, many people on the lower end who must have graduated into cigarettes from other forms of tobacco. So on the balance, I think overall demand for cigarettes in the country has gone up year on year as things stand today. And I think it's going to be many more years before actually decline in demand starts.
Yeah, for the 44% of the sales for ITC, which does come from cigarettes, it also cherishes a good 58% of EBIT margins. And like Sudeep has been saying, that we've seen the price hikes or tax hikes come in time and again, but hasn't quite impacted the sectors. If anything, the cigarette volumes have only gone up higher, at least for ITC. That said, let's just take stock of what else is happening in the market. Well, today, of course, most of these stocks are seeing a bit of a drubbing. But Kunal, where do you see Godfrey Phillips fall to if there is some follow-through selling, and then would you buy that decline?
Well, yeah, I think at current levels itself, 6,000 or maybe 5,500 could be a better level for Godfrey Phillips, because what had happened is, on the way up when the stock moved towards 7,000, 7,500 mark, the indicators were steeply overbought for Godfrey Phillips. Right now, the last 2 days of selling indicates that it's more of a mean reversion, for the indicators and for the prices after that steep run up for the stock, and that support point for the stock is somewhere closer to 5,500 mark. So maybe starting at current levels and then building on to the stock at lower levels, say closer to 5,500, could be a good strategy.
Right. Naresh, let me come to you. Actually, as I see my screen, the flashes that COMEX April gold contracts have hit a fresh record high levels, is reached the levels of about $2,973 per ounce. What's your take coming in on the Indian gold financier companies in the light of what exactly is happening to the gold market and the gold prices globally and back home as well? But on the charts, how are these gold financiers looking to you? Because most of them actually did report decent set of numbers.
So you can see clearly Muthoot Finance has been the leader. Say as of now, also it's just 1 to 2% away from an all-time high. It's up from November when it was at 1,800 odd levels to 2,200, 2,300 now. So clearly it's been a positive beneficiary even when the markets have corrected. At the same time, Manappuram, which continues to have a lot of volatility, keeps going into derivative band, but it is coming back to that 200, 205 mark. And that has been a resistance for the stock from 2019 onwards. So for now, going forward, it could be Manappuram also, which could break out into new all-time highs. Both these names look interesting, and Manappuram on any sharper dip would be an interesting opportunity.
Bunch of other stocks. JP Morgan has come out with a note on Petronet LNG. They've maintained their overweight target price 377. They're saying that the stock builds in no volume growth. 15% cut in the Dahej regas tariffs by March is what they're anticipating. But they're saying the strong valuation support for the stock is what makes it attractive right now. Petronet LNG, a big winner today, holding up 3% as we speak. For Tata Power as well, there's been an HSBC upgrade. They've upgraded the stock to now hold from the earlier reduce, and from 300 they've upped the price target also to 345. They're saying there's improving execution amidst weak macro, and they are increasing the FY25 to 26 estimated EPS by 9 to 13%. That's Tata Power in trade currently holding up 3%. Sudeep, we were just chatting about this with our earlier expert as well. What's the best way to capture this entire power story in India? Would it be via financiers, grid, anything else?
I think, the way I look at it, there is absolutely no doubt that entire power sector is going through a massive transformation. And this positive transformation is going to last for many more years. The demand is structural, and every segment of the power industry will benefit out of that. Now, if I come back to the stock market, I think I will definitely be a buyer in NTPC. I have been buyer in NTPC for last couple of years, and I continue to maintain my stand there. It's a leader in the power generation space with fantastic backward forward integration, and of course the green energy subsidiary and everything else around it. The way it's growing, commendable. Valuation wise, it's not cheap, but again, it can be picked up for 1 year plus kind of a time horizon. The power component and power ancillary manufacturers can, transformer and other manufacturers can also be looked at. Transformers and rectifiers is one company which we have been liking for some time. Of course, there are many other Vodka and many other companies, but the valuation there isn't cheap. The power financiers again do look good. Look, we still have massive power capacity which needs to be created going forward. And the financing for this has to come from not from traditional banks, but from these power financiers. So the demand for their services and their loans will remain very, very strong in the foreseeable future. So both the power financiers, or all three power financiers, can be looked at from a long-term perspective.
Moving on, Adani Group portfolio delivered its highest ever trailing 12-month EBITDA or operating income and ensured sufficient liquidity to cover the debt servicing for at least the next 12 months. The credit profile has now achieved a significant milestone with about 75% of the run rate EBITDA generated from the assets with domestic ratings of AA- and above. That's as per their statements. The company has added that the Adani portfolio companies are now on a high capex path and with a strong base of increasing cash flow generation and project execution outlay of their respective portfolio companies. So that's about the Adani group of companies who are in a new phase of major capital. But talking about Adani group of companies, Kunal, what's your take coming in on the charts and which of those companies actually are looking attractive? Do you think that still Adani Ports rules the charts?
I've not seen the Adani group of stocks frankly since last so many weeks. But yeah, I think just primarily looking at the charts right now, Adani Ports, Adani Enterprise are the ones which had been formidably very strong. But in this leg of the market move, the last 2-3 months specifically, I think almost all of these stocks, have actually underperformed. Even, the likes of Adani Green, Adani Transmission, Adani Wilmar, I think all of these stocks have gone through a sharp corrective phase. The, concern for these stocks, what happened earlier was maybe 2021, 22, that kind of a time phase. These stocks were moving into a different tangent altogether, devoid of how the markets were moving up. And now comes a point where these stocks are struggling to find their feedback even on the phase when the market comes into a rally kind of a mode. So I would probably expect that these stocks may continue to lag, underperform for quite a bit of time. You need to wait out for those decisive breakouts. So the first level of a breakout we look out for is the stocks breaking past above their 50 as well as their 100 moving averages. And then I think if these stocks come back into a swing breakout, by that maybe a 10% rise from the previous swing lows, that could probably be a starting point where these stocks may start to look attractive. But I think buying on dips in these kind of stocks as of now may not be a fruitful strategy.
All right, so that's the take coming in on the Adani group of counters. Coming to you, Mr. Bandyopadhyay, I wanted to understand your views actually coming in on the entire space, that is the FMCG space, because if you look at the charts of this one, except February 1st, when this index actually rose about 3%, post that is actually seen 14 days of losing streak. What's your take coming on the FMCG space? Do you think that this is going to be the sector for the H2 of 2025 as everyone is touting it to be?
Unfortunately, the recovery is taking more time than it was expected. The Q3 numbers we saw Yeah, this was nothing great. I mean, they did kind of didn't meet even the market expectations. We had seen the rural demand softening, and then when rural demand picked up, urban demand was softening. So overall, I think they're still to come out of the demand challenges. It will take probably a little more time. We know what's happening in the economy. I think the government, through the budget, has tried to give a lot of incentive for consumption. We'll have to wait and watch. And one must remember that the traditional FMCG companies may not be the direct beneficiaries of the consumption boost. That probably will go to consumer durables and other little more pricier category. Typical FMCG companies' consumption may not get a boost through the budget reliefs. However, overall improvement in the economy will definitely stop the downtrading as far as the the product basket is concerned. I am long-term positive on HUL, Dabur, ITC. But as things stand today, I think it will take a little more time before the recovery phase starts. If somebody is a long-term investor, they can look at opportunity for picking up slowly these stocks and building a portfolio. But to rush into these stocks for upward movement, immediate upward movement, the time hasn't yet come.
That's the take coming in on what to do with staples right now. But just taking stock of how we're shutting shop in the day, power, of course, seems to be that one big mover. There's some buying selectively within autos as well. Tata Motors, Bajaj Auto, M&M all holding out well. Shriram Finance, of course, is your top mover within the large caps right now, nudging that 580 level. Trend seeing a very meager bounce. IndusInd, perhaps the only banking counter, along with SBI from within the large caps, which is holding out. And then, of course, there are a couple of metal plays like a Hindalco, Tata Steel, JSW. They're the ones which are also holding out quite okay in trade as we speak right now. But Sudeep, the sector that I want to discuss with you is what's happening within the entire pharma pack. A lot of fear around tariffs. We've seen a spate of US FDA observations as well on many pharma companies in just the last few days itself. Do you think these opportunities are good buying opportunities because the stocks are on a decline?
Aisha, selectively good buying opportunity. One has to be a little careful about what you are buying. Look, there are two things which I strongly believe. One is the tariff threat by the US president and US current administration is real. Some kind of tariff is definitely going to come, which will create some disadvantage vis-a-vis export into US. Now, under these circumstances, companies which have manufacturing facilities in US will benefit. So, Piramal Pharma's name comes to my mind immediately. Of course, otherwise also their business is doing well. The hospital generics is doing well. Complex, medicines, which basket they have is doing well. And CDMO is booming. But the biggest positive is they have a large US manufacturing facility. So one should look at that. The other side, I believe that domestic pharma demand is strong and growing, and the compounding rate is steady. So one can focus on companies having strong domestic business. Mankind Pharma is one company which has about 95% of its business coming from domestic market is what I look at. Also, remember they acquired BSV a few months back. Generally, the analyst community didn't like it much, but I believe it's a significant long-term positive. So one can look at domestic-focused pharma companies as well as pharma companies having manufacturing facilities in US.
Kunal, let's see those on the charts, Mankind as well as Piramal Pharma.
Yeah, I think Mankind, for example, the stock made a high of around 3,100 mid of December 2024, and from there the stock has come back towards 2,300 levels, which means almost like a 30% correction for the stock from the recent highs. The volumes have been a bit more abysmal for the stock in this leg of sell-off, which means we could be looking at the stock recovering say over the next few weeks. Piramal Pharma could be an interesting case. The stock, I think, had fallen by more than 40% from 305 as a high towards 180 or 185, which was the low for Piramal Pharma. And from there, the stock has made a very good comeback, 2 days or 3 days of consecutive price uptick. And I think the stock has moved up on extremely high volumes also. So I think that's another name to look out for. And it indicates that after such kind of strong moves which you've seen into the stock, it indicates that stocks form a solid bottom when they see such kind of a sharp contra price reaction from the immediate swing lows. So I think closer to 180 could be a swing low for Piramal Pharma and closer to 2,200 for Mankind.
Interesting. Sudeep, what about MNC Pharma? Is one safer being in those names, your Abbott's, Pfizer's, etc.?
I think GSK came out with a fantastic set of numbers and definitely does look good. The overall MNC Pharma, the position I'm not too comfortable with. They have good products, they have a strong management, but I don't think as an investor I would rush to buy some of these MNC Pharma names at this stage. I will rather stick to the names I mentioned. GSK, of course, the product basket which they are introducing now has a lot of traction, so one can look at GSK.
That's the take coming in on pharma and also MNC pharma names. But on that note, Naresh, coming to you, wanted to know your BTST ideas for our viewers.
So first would be a buy on NMDC, seeing good momentum out here based on breakout done about 67, stop loss at 66, target price of 70. Second is a buy on Canara Bank, has seen a large correction showing reversal signs today. Stop loss at 87, target price of 92.
All right, Kunal, over to you. What are your BTST ideas?
I'll go with the one Tata Steel, something which I've been bullish on over the last few days. Looks attractive for a target of 145. Stop loss now could be trailed high to 133 for traders who are looking at a fresh buy. And the second would be a buy on Chambal Fertilizers, a stock which I think is on the verge of a breakout. 575 could be a BTST target, stop loss at 540.
All right, so those are the BTST ideas coming in from our experts. If you look at the markets at this point in time, yes, we are seeing some sort of semblance when you compare it to the rest of the Asian markets, because the Asian screen was bleeding red while Indian markets have held on in today's trading session. No doubt that you have the Nifty Bank that is underperforming the benchmark indices, but you have the advanced declaration, the breadth of the market still intact. It's looking pretty good. It's more shades of green than red, with Shriram Finance, NTPC, M&M as well as Adani Ports holding on to gains, while you have a major of the large caps as HDFC Bank that's weighing heavy on the Nifty Bank as well, 2.5% downtick coming for that one. Maruti, Tech Mahindra, Tata Consumers are the other set of losers in trade. But also, I wanted to come to you, Sudeep, to get your final take coming in on the IT sector in particular. And how are you actually viewing this one? And are you playing this sort of a theme right now?
Well, I think overall I am positive on IT. We saw the Capgemini numbers a few days back, and though the Capgemini is not a representative of Indian IT, because every IT company has got a different set of clients and different expertise, I would say that to an extent, we believe that by and large, Indian IT companies are on a good wicket. The new US administration is very clear that they want a lot of activity, a lot of production, a lot of manufacturing, a lot of business in US, and that does augur well for Indian IT companies. Most of them have large presence in US itself, so it's not that they have to struggle with the visa challenges which the administration may pose. So I am positive as far as their order book is concerned, as far as their deal flow is concerned, and even their margins should be good. The trick would be to focus on sectors which are doing well. Let's say travel and tourism is doing well. So if an Indian IT company is focused on travel and tourism, I think we should look at that company. BFSI definitely under the current administration, the way US is moving, will do well. So companies having focus on BFSI will do well. So that's how we need to pick and choose. Amongst large cap and mid cap and small cap ITs, I would rather pick up specific IT companies rather than going by large, mid and small. So let's say Emphasis, they have a significant BFSI focus. So maybe it's one company one should look at. Maybe Coforge, because they've got a very large travel tourism related, airline related business. So one should probably look at that. So this is how I would rather pick stocks than by the capitalization of these companies.
Interesting. Sudeep, we'll let you go on that note. Thanks as always for taking the time out and joining in. Just looking at the market construct, auto is definitely under pressure, but only selectively. There's Maruti, which is down, but on the flip side, there's M&M and Tata Motors, which are still holding out. HDFC Bank going home weak. It's down a good almost 2% in fact in trade. Bharti, ITC, Sun Pharma, ICICI Bank, Kotak, they're all a sea of red. In fact, on that note, I'll thank Kunal and Naresh as well for joining in on the show, and I'm going to hand it over to Snehi for the closing trades.
Well, absolutely. Let's take a look at how the markets have shaped up in today's trading session. And range bound is the word that we are going to use for the Nifty today, because it's largely been stuck in the 100-point range that we've seen today. Remember, at one point of the trading day, we were struggling to hold on to the 22,800 mark. 22,812 is the precise level of the day's lowest point. From there, we've recovered a good 100 points. So not all that bad for the Nifty today, but nonetheless, we're trading with a slight negative bias when it comes to the Nifty. And the 20-point cut on an intraday basis is what the Nifty is indicating. Sensex, however, slightly deeper cut coming in on that front, 0.3% cut coming in on the Sensex right now, so that's something that's looking weak. Nifty Bank continues its weak performance. It's been down and out over the course of the trading day and is still there, no recovery on that front. 0.5%, slightly more than 0.5% cut coming in on the Nifty Bank in today's trading session. The advance decline ratio is looking healthy today. The tilt is towards the advances today, so that's at least looking good. And on the back of that, let's pull up the India VIX, because that is something that is acted very fabulously in over the course of today's trading day. 4.5% lower. Remember, yesterday we were at the 16 level. Now we've come down to 14.7 thereabouts. Looking very healthy for the India VIX right now. Let's also pull up the broader markets, because they've done the majority, or rather all the heavy lifting when it comes to the market today. Nifty mid-cap, very sharp uptick coming in. A 1.2% uptick coming in on Nifty mid-cap, and small cap continues to be the outperformer of the benchmarks today. A 1.3% almost uptick coming in on small cap index today as well. So while the benchmarks are slightly under pressure, it's the broader markets that have done all the work for the markets today. In terms of Nifty 50 gainers, like Aisha was mentioning, Shriram Finance, NTPC, M&M, BEL, Adani Ports, Trent, Hindalco, all of them trading with gains of more than 2%. On the flip side, what has caused Nifty to remain in this range throughout the day today has been HDFC Bank, a 2.2% cut coming in on that stock. Maruti Suzuki under pressure, Tech Mahindra, Tata Consumers, HCL Tech, ITC, ICICI Bank. All of them trading with cuts of anywhere between 1 and 2.5%. But let's take a look at some sectoral winners and losers in today's trading session. It's been the day of the metals, because the metal pack has been shining bright today. Almost a 2% uptick coming in. Nalco, NMDC, Steel, Vedanta, all of these stocks have done well today. Followed by Nifty Energy, PSU Banks, Auto and Realty. On the flip side, what did not do well today was the Pharma, IT, as well as the FMCG index that was largely flat. A couple of newsmakers in today's trading session on the back of some brokerage note. Morgan Stanley on chemicals like PI Industries, SRF, Naveen Fluorine, Tata Chemicals, all of these stocks were in focus. A real winner in today's trade was NHPC on the back of a very brokerage note coming in from CLSA. So that stock was looking good today. It's been upgraded to a high conviction, outperformed target price of 117. NHPC up 7% in today's trade. On the flip side, UBS on Bajaj Finance, poor note coming in. That stock was lower. Tata Power has been upgraded to hold from reduce by HSBC, so that stock was doing well. IGL, one of the last stocks that we want to mention, that also did very well on the back of a Jefferies note coming in, and IGL was also went home with some good gains of about 5%. But on that note, we'll wrap it up on today's edition of Closing Trades, and this is how we've ended the day. Nifty around the 22,900 level, struggling to be there, but nonetheless 23,000 still seems quite far away for the Nifty.